They appear to be unstoppable. Strong brands. Has millions of clients, billion-dollar values, and a presence everywhere you look. However, what occurs if the music ends? What occurs if the economy collapses? Overnight, confidence fades and wallets tighten. In 2020, the pandemic cost United States. Some of the most well-known brands in tech, travel, and retail are in a precarious position. Excessive debt, extremely narrow profit margins, and a reliance on consumer spending that declines during a downturn. This brings us to the actual query. Which businesses won't make it through the next economic downturn? Stay put, since you might currently have some of these in your portfolio. The top-ranked United Airlines, the Sky, are said to be hospitable. However, what would happen if nobody could afford to fly? For one of the largest airlines in America, it is the impending storm. Even though United Airlines appears to be flying high, there will soon be turbulence. In 2024's first quarter alone, fuel prices alone increased by 10%. And now that a possible recession is on the horizon, Americans are eliminating their golden ticket, leisure travel, from their budgets first. You'd be surprised at how fast profits disappear when planes begin to travel with only half of their cargo. In 2020, the pandemic cost United $7 billion. Imagine that happening once more, but with mounting debt and skyrocketing interest rates. Business travel hasn't really recovered yet, and it may fall considerably lower if the economy collapses. I have a question. How long can a business continue to thrive when customers stop arriving? Put on your seatbelt. United might be headed for a catastrophic crash. DuPont de Nemours, Incorporated, number 9. It used to be the driving force behind Teflon and Kevlar. Outstanding inventions that influenced American business. However, you know what? Today, DuPont is struggling to remain relevant in a world that is changing more quickly than it can adjust. Today, DuPont is struggling to remain relevant in a world that is changing more quickly than it can adjust. In a single year, its stock fell by more than 25%. Additionally, Wall Street projections for earnings have been missing 4 times in a row. Why? Due to DuPont's success. When businesses prosper, automotive, electronics, and construction, DuPont hemorrhage when those sectors slow. To keep alive, it is already laying off employees, merging departments, and selling off underperforming units. Here's the kicker, though. During recessions like the one in 2008, when net income dropped by more than 60%, their profit margins drastically decline. Demand will not be pleasant if it crashes once more. Have you ever wondered how a century-old industrial behemoth might suddenly appear unsteady? Continue to observe before we go further. We're just getting started. Press the subscribe button. It enables us to continue providing you with insightful, eye-opening content that breaks through the clutter. You won't want to miss what comes next, we assure you. They contributed to illuminating America. They are currently attempting to keep the lights on for themselves. Stay with us to find out what went wrong. General Electric Company is ranked 8th. This business was once the epitome of American ingenuity. Everything has its fingerprints on it. Your kitchen's light bulbs, to the jet engines that propel the airplanes. But there are fissures developing behind that illustrious moniker. It's possible that General Electric will continue to have influence in the industrial sector. However, you would be surprised to learn how delicate things actually are behind the scenes. In the last 10 years, GE has been cutting divisions, losing billions of dollars in assets and barely surviving. Previously valued at almost $600 billion, GE's market capitalization has plummeted to about $170 billion. Here's the kicker, though. They are haunted by more than simply their history. The future appears to be equally uncertain. GE has reorganized into 3 business segments: energy, healthcare, and aviation. Sounds good, doesn't it? However, each of those industries is extremely susceptible to a downturn. In the aviation industry, fewer flights translate into fewer contracts for components and services. Sounds good, doesn't it? However, each of those industries is extremely susceptible to a downturn. In aviation, fewer flights indicate Reduced contracts for components and services. Budget cuts in healthcare could postpone hospitals' acquisition of expensive equipment. Additionally, when governments tighten budgets, energy projects may be shelved overnight. Additionally, debt looms. Once the moneymaker, GE Capital, became a financial nightmare. Additionally, despite the company's best efforts to clean it up, long-term liabilities still total almost $40 billion. However, what truly catches people off guard is this G's. The free cash flow is quite constrained. Projects could be delayed and operations could be choked in a recession and compel additional asset sales. If you're saying to yourself, well, they've survived worse, keep in mind that thriving is not the same as survival. How can a business go from being a Dow Jones darling to barely surviving? It begins slowly and then suddenly. The number 7 large lots. During recessions, discount shopping should increase, right? However, what if I told you that one significant discount chain might not make it through the next one? Big lots must deal with that fact, and the statistics don't lie. There is more to this than just a decline in sales. It is more akin to the foundation is crumbling. Big lots reported a more than $200 million financial loss in 2023. And since more than 1,400 establishments depend on foot traffic and shaky local economies, a slight decline could upset the equilibrium. The business is under pressure from all directions. Growing expectations for wages due to rising inventory prices, rents that are out of control, and, worst of all, fewer customers. When things are hard, their target market of middle-class and lower-class families is the first to make cuts. That translates to brutal bottom lines, smaller carts, and fewer journeys.